The China situation, it's so strict and people are confined to their homes. And literally, they can't even go out. There's rumors, stories about people not getting enough food, not getting medicine. Some say they're starving. It's a big deal, and it's going to affect the whole world economy and the markets, definitely.
It's like we're seeing the worst possible thing that could happen to globalization. Now everyone's getting a slap in the face saying, we can't depend on that part in that country anymore. We got to make it ourselves.
Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Welcome back to Liberty and Finance. We're delighted to have this pair of returning guests, sisters, Pamela and Mary Anne Aden of the Aden Forecast, founders and actually charting pioneers for that period of time, are here with us again on Liberty and Finance, together with myself, Dunnigan Kaiser.
And Melody Kaiser.
And we're glad to have you ladies back. Thank you for coming back on Liberty and Finance.
Thank you for having us. It's a pleasure.
Great to have you.
We met you first at the Rural Investment Symposium, then called the Sprott Natural Resources Symposium, and have been following up with you periodically since then to get your indications as you've been providing forward-looking guidance to your subscribers for like 4 decades in the areas of many of the major markets, not just limited to precious metals, but all markets. And we had one overarching question. Well, we're going to follow up with a lot of questions, frankly, but wanted you to first give you a chance, if you could, to just update us on some of the highlights of your most recent research in the areas of greatest concern or greatest opportunity that you've been watching.
Well, right now, there's so much going on in the world, and it's really fueling a lot of uncertainty, and with reason, because, what's going on with the war in Ukraine. Now we're having this situation in China that all of a sudden, just recently, people are starting to kind of look 3 times at, because what's happening there is really very mind-boggling. And so that's been a big deal, big influence. And then, of course, the Fed, everyone's always wondering what Powell's going to do, and that's really moving the markets as well. And then there's just that general uncertainty about what's going to happen to the economy. Inflation is a big concern. Others are worried about slow growth and a recession. So there's a lot going on right at this moment.
And that's the supply, not to mention the supply demand being the biggest a detour of being able to have a sustainable economic regrowth from the pandemic. So, and it looks like there's no end there for at least for a good while.
No, and it's interesting because everyone was pretty much breathing a sigh of relief, like, oh, well, the pandemic's over now. And then this thing with China just burst upon the scene. When in other countries it's trending down a lot, the mask wearing was falling to the sidelines and everything. People were traveling again. And now the China situation is, the reason it's so important is because it's so strict and people are confined to their homes. And literally, they can't even go out. There's rumors, stories about people not getting enough food, not getting medicine. Some say they're starving. And so all of this, and the Chinese government is just clamping down, not giving anybody a break or anything because of their zero COVID policy. So now that it's been dragging on, as Pam mentioned, that supply chain problem, no containers, from what I've heard recently, what I've been reading, is nothing has gone out since late March out of Shanghai. But then there's dozens of other cities that are also shipping centers, and that they're all pretty much shut down, along with, Shanghai is the most popular. Now it's spilling over into Beijing. But what that means is that the supply chain is going to worsen. That's going to make prices go higher, less demand out of China. And since China is the second largest global economy, it's a big deal. And it's going to affect the whole world economy and the markets, definitely.
Mm-hmm. I think something that maybe you didn't say, or maybe you did, but was also the importance that all of us, we get so much from China. I'm assuming most countries do. And so if they're locking down, they're not, and you're right, they're not, you said they weren't sending out products. So that makes us very vulnerable when we're so dependent on China. Is that one of the things you're concerned about?
Definitely.
And it's the world, not the U.S.
It's the whole world. And it's going to help fuel more inflation, which is already, at the highest level since the 70s because of just the lack of products or the lack of supply. So it's kind of a mess in that sense.
Like the supply side is causing the inflation, not the demand side. That's what's interesting. And it's like we're seeing the worst possible thing that could happen to globalization is depending on each other, each country. There's not, now everyone's getting a slap in the face saying, we can't depend on that part in that country anymore. We got to make it ourselves. And so this is all a whole big change, along with many other changes that's going on. Nationalism is becoming more important than globalism. And
that's because a lot of it is because of the Ukraine effect, because, they've kind of been shut down on their exports also, which, as you know, they're a great wheat supplier to many, many countries. So now everyone's looking inward. What are we going to do? And so a lot of experts are predicting there's going to be a lot of countries where we're going to see more world hunger and that sort of thing going on. So it's just everybody kind of has to look out for themselves and see what they're going to do. And in the U.S., it won't be as bad. But this whole China effect combined with Ukraine could definitely slow the economy.
Yeah, the stagflation sort of economy.
Right.
Yeah, stagflation is one of the things you mentioned earlier. And we've got some questions from viewers about interest rates that may be related to inflation. We'll get to that in just a minute. But we also wanted to circle back with you about something that you brought up when we spoke with you nearly a year ago. You talked about looking for major trends. And in your discussion just now about restricted and constrained supply, one of the things, in addition to the ones that you specifically mentioned, like food, that sort of thing, energy coming out of Russia and different areas that are under strain right now. And so there's a question from a viewer. Well, first of all, I'll start with a question from last time you spoke with us about when you announced a gold mega cycle, or mega trend, when we spoke nearly a year ago. Given that gold has struggled to maintain, its previous high, do you still see that mega trend intact for gold going forward? And then to put a cap on it, this viewer, Cajun Jameis, says, gold, silver, and oil, what's going on?
Yes. No, I can understand everyone's uncertainty and not knowing what's going on, because it is. Like, we always feel this is kind of like we're in a turbulent change, and that's still happening. But yes, we still think that not only gold, but the commodity cycle is a mega trend, uptrend. For whatever reason, supply or demand, it's a mega trend. And also the new supply that is being needed, like with the cars, electric cars, and with space, and with the green energy. This is all influencing that had never influenced it so much in the commodity world. So yes, we're very bullish on the commodity sector. That doesn't mean it's not going to have some down moments like we've seen this week, but it does mean that the mega trend is what we were referring to. We think that has several years to go. And this year, we could see, like, since we're getting close to the summer, we could definitely see a slowdown now until the fall. And not to say they necessarily fall, but they may be not that interesting. And it would be definitely a time to buy. And if you haven't bought or want to add to your position, is looking for this intermediate low area that we're just starting to come into. So those are the lows. Those are the ebbs and flows of the mega trend. And this is when you want to, if you're not in and you want to get in, these are the moments to take advantage of it. And so we're talking about gold, and gold has many cycles. It's very interesting. This is the one you were referring to. I think it's the 18-year cycle we talk about. It's been repetitive, 11-year, 7.5-year, and the 7.5-year lows have been so the same since the free market started in gold. I mean, it became a free market commodity back in the 70s. It's had a 7.5 to 8-year low, but it's been more slow. Like in a bull market, it'll go 7.5, and then a bear market could last till late. But the thing is we're coming up at the end of this year to a important key low area for gold, which is the last time it was in 2015. So we think that this sluggish thing we could be seeing this year is going to be probably one of the last times we're going to get these kind of prices. So this is something that we really are in tune and focused on. So and then the mega trend on the upside, it looks like 2026, 27, that we could see, like if you're looking at the trends repeating, that could be when we see a high area around that time.
Are you saying gold might be a good time to buy because it is kind of on the lower, even though you're right, you said that we're in a mega trend for it to go higher. Is it a good opportunity for people to buy gold then?
Yes, definitely. Like it just started falling, but so I would give it some time.
Yeah.
And I wouldn't necessarily buy tomorrow or today. I would wait a little bit more and see. And that goes for gold shares too. They had a really nice rise up. And so it's time for them to anyway have a downward correction. And that goes for silver shares. Silver itself drug a little bit because of kind of an influence by copper that kind of went sideways this past year. So, but that will change at some point. So yeah, we also like silver and the intermediate low. But when the resources really take off, like they have been actually already, we're going to see silver really take off. So this it's kind of been there, but not totally.
Okay, we have another question here from Joseph. What would cause national treasuries to accept gold as tax payments, and what prevents or allows banks to accept gold as collateral for a loan?
I don't think that's going to happen it'll be a while. I mean, a lot of people think it's going to happen pretty soon because of the terrible financial situation most countries are in with their massive debt. And so eventually, yes, but I think that's looking downstream quite a while. I think they'll try probably most other things before they would probably end up going to gold. Yeah, simply because they're just trained to trust their currency, and although that trust is chipping away a little bit, but it would be like, for example, we saw in a desperate situation, Russia turned to gold just recently. So that was interesting, but I think it kind of when you're up against the wall, then you might go to gold, but we're not there yet.
Back on the question of inflation and how it will affect people in many areas of their lives, including interest rates, Rach D says, how much longer do you think it is until we see more rapidly rising interest rates? And will these propagate to fringe countries such as Australia and New Zealand?
Well, we're already seeing rates go up, although like some more than others. But going back to that same situation where, for example, a lot of people are expecting the Fed is going to start raising rates, but they're limited in what they can do. They can't, because of the huge debt, they can't raise rates too far. They've had zero interest rate policy for it's been 12, 14 years or since 2009. And so 2008 or 9. And so when inflation is raging at near 10, some say 14% in real terms. If you look at the way it used to be calculated before they made adjustments. So if you raise rates a 0.5%, which the Fed is saying they're going to do, even if they still have just rates at 1.5%, 2%, that's nothing compared to inflation, and they're not going to be able to catch up because it'll just fuel a terrible recession, and people are there's too much debt to have rates go in line with inflation. So we think this time it's definitely not going to be like what Paul Volcker did in the 70s when he raised interest rates to 20% to curb inflation, which was similar to what we're seeing now. That will never happen.
Yeah, it's a different inflation. It's different, and the interest rates. But for as much as they've risen this last 6 months or so, the short rates, we're talking about the 2-year rather than the 3-month, that one really soared, and it got close to the 10-year. So that is almost wanting to be inverted, but it's kind of playing around in that area right now,
Yeah.
which we think that kind of makes it look like it is time for a downward correction in the interest rates for right now. They've gotten ahead of themselves. And it's all thinking of what is what is the Fed going to do?
Before we move on to the next viewer's question, I wanted, if I could, follow up on something that you just mentioned, that in a rising interest rate environment, stocks, for example, get impacted. They often, the markets in general will go down in that kind of an environment. But you mentioned also this gold mega trend, and that should eventually lift up mining companies, which would also have stocks. So this is this arm wrestling between interest rates, pushing down stocks versus people recognizing that there's real intrinsic value in metals and metals mining companies, even though those are stocks. How do you see that, and what have you seen in the past? Is there an order and a sequence to the way that this plays out? Like first, everything gets hit, goes down, and then there's this realization, and then there's a rotation into the metals and the miners. Even though they're stocks, they get bid up afterwards, even though maybe the broader markets are still depressed. How has that played out in the past?
So that's a great question, because there are times, like I'm thinking of 1987, when the market just fell sharply, and of course the gold shares fell with it. Everything fell. It's like the everything fall, but they were quick to recuperate. But so was the stock market. But a lot has to do with how gold is being in that environment of a falling stock market. So if everything falls like in 2008, then yes, they all will fall together. But like you said, they'll be quicker to recuperate. And if gold recuperates strongly, so will gold shares. So that's kind of how you have to look at it, is they tend to move with gold, but they can be influenced on major whips in the stock market. They can definitely be influenced, but they will end up being what gold is doing. If gold's in a bear market, they're not going to be very good. But if it's in a bull market and it's coming back up, then yes, they'll do great.
And Frank has a question, kind of moving, it's still kind of on the interest rates thing, but uranium is the question. And Frank asks, do you have any short-term or long-term views on uranium? Would it track more with the energy sector or general equities in a rising interest rate environment?
Well, yeah, that's a great question.
Yeah.
Because uranium is kind of unique right now. Like it used to be the hated energy source, because with reason, but it's become the green energy of the future, and so for that reason, we think that it's an excellent buy. We think it's got a long-term, it has a long-term rise of its own, and independent of oil. Although all the energy tend to move together, like natural gas has been doing very well, along with oil and along with uranium. But we think uranium is going to have its own life, and as in the resource sector, in the green energy and in all the energy, it's going to be wanted. It can never replace crude oil, but it definitely will be a good second.
With uranium having such a long half-life, how do they say that it's green in any way? Because
the storage difficulty.
Yeah, the storage
safety,
difficulty and things. Yeah, right, exactly. Thank you.
Well, I think the technology today, from what they tell me, the technology today is making it very safe and much better to hold, to use, and to all that. It won't be the mistakes of the past. So the technology of today is what's making it a better green.
There's a related question to that that was brought out in some recent articles about the green movement having kind of being two-sided, in that we all like the idea of sustainable, environmentally friendly energy, and how that can elevate living standards throughout the world, especially in poorer countries who've never enjoyed the benefits of the information age and electrification, that sort of thing that the developed countries have. However, there's this side that isn't talked about as much, and I think it's sometimes painfully obvious when you see policymakers promoting one thing and then doing the other, is this not in my backyard syndrome. Is like the idea that so many people think, oh, electric cars, that's the way, without stopping to think electric cars do not create any energy. They're users of energy. That energy has to be extracted somewhere else and either stored or transferred or that sort of thing through power lines and power plants and mining or whatever to make this all possible, or that a lot of the materials that are even necessary for building some of these green solutions, like the batteries that you need for storage and so on, are coming from rare earth metals that need to be mined in all kinds of places around the world. So it seems almost like we're thinking in a childish way about, I just want the fruits, I don't want the farming that comes with it. I want the green energy, I don't want the mining, or I want the green energy, I don't want the nuclear plant or the coal plant or the whatever. Can you talk to us about this, maybe that specifically, and then feel free to broaden out into this phenomenon of ES and G that's kind of been this politically correct requirements that corporations are saying that they're abiding by, but how real is it when you really get down to looking at the holistically, the real all the impacts on the people and on the environment?
Well, I think you're right. I mean, I think most people want to be eco-friendly and do their best, recycling, whatever it may be at home. Everybody tries to do, or most people try to do their part. But you're very right that it's a two-sided coin, because it's great to say, we see a lot of that here in Costa Rica because it's a very eco country and they're proud of that. But you still see people throwing, trash here, and it's kind of like you say, kind of a double standard, and that's the way it is with this whole global green movement. Yes, we want electric cars, but you're right, you'd have to depend on the power plant. Mm-hmm. So how do you resolve that? Now, there are a lot of companies that are trying to do it in a green friendly way. But some have been somewhat successful. But it's going to be a big transition that's going to take a long time. Yeah. And in the meantime, yes, you need some mining, and you need the power plants, and you need, I think, just a lot of people trying to get rid of coal has been a big deal, And it's a process. And I think it's not going to happen. You can't be black or white in the situation. It's just a process that's going to take its time.
Yeah, and there's solar energy, and there's the windmills. We have a lot of windmills here. You see them up on the hills, and the solar panels. So those are in, but they're never going to replace the easy oil. But it is a process, like Mary Anne said, because it's not easy. We can still remember the crisis in the 70s. We were living in LA, and everybody couldn't believe how there was no gas in the gas stations. It was like disbelief. People screaming at the gas stations, and they couldn't believe that there was no gas, and there was no food and there was no bread on the counters in the grocery store. Like all of a sudden, it wasn't a long period of time, but it was a time when everyone went nuts over this, and we're kind of facing that kind of idea for the first time again. But after that, all the companies promised they got to get off oil. They have to get something else. But then time goes on and nothing happened, as you see, maybe like that. Maybe
well, a little bit.
Yeah, a little bit.
But you even see the latest example now in Germany. Everybody's mad at Russia, and they don't want to. They're putting sanctions and what have you. But Germany depends so much on Russian natural gas, and winter's, coming, or it's coming to an end actually.
Yeah,
but they're still importing that natural gas. They've tried to cut down, but it's like, is it this or is it that? And so, in the end, they're still taking it in. So, and they're claiming later this year they're going to, or in the months ahead, they're going to be cutting down or cutting it out or whatever. But it's not so easy.
Yeah, but for the next winter, they have a few months to see what they're going to do. But in the meantime, they're building up their nuclear energies. They need uranium. France being one of the leaders there, I think. So, everyone's having to go back and think a lot of things about where's the source, what are we going to do, and why we can't be vulnerable to another country. And also, so this is also new for everyone. And because it was taken so much for granted before the pandemic, then no one even kept inventory because everything was just moving. There was never any problem. And now all of a sudden we're seeing all the problems all at once. So it's I can understand why everyone feels so insecure. It is an insecure moment.
Yeah, I guess that's part of preparedness, is actually having something that you need, or a backup plan or two on how you're going to be able to get it. I had a good friend I worked with in business who said his banker told him never confuse cash flow with cash. There's a difference between saying we've got the flow we'll get it next month, versus, no, we've got this asset, we have it in our hand, and that's true for food, it's true for energy, it's true for a lot of different things that we all depend on. I was just wondering, when you mentioned LA and then you ended up in Costa Rica, if there was an event or events that helped to kind of crystallize in your mind, let's get to some place that's going to be more survivable for us.
No, well, we actually didn't go in, not when you're 25. But yeah, we came to Costa Rica. Our mother's Costa Rican, and she was living here. So we thought, we'll come here for a while and see how it goes. And we could put our lives in LA on standby, which we were ready to go back to. We worked in LA. We're from Long Beach, California, actually, and born and raised there. And so we came here to for maybe a year or so and see how.
But initially, it was just going to be a couple months. Like, we were going to just, see. Well, we were thinking a few months, and then we extended it to a year, and then it ended up, we liked it, and we just ended up.
Thought it was interesting to stay here.
Extended another year, and then we ended up being here all these years.
But the interesting thing is, our background is in real estate financing, but we met a mentor here, and that's what made us want to stay here, is because we were learning all about the markets and doing all the cycles. And he had a Hewlett-Packard computer back, you can imagine, in the 70s. And so we thought this was pretty exciting. And plotting charts and making the programs, it was very exciting. And so we really loved it and did all sorts of studies on the market.
Yeah, that's basically why we ended up staying, was because of meeting him through a mutual friend, and he needed assistance. And so we kind of fit the bill. And that's where we learned a lot about the markets, because he was a very private, personal investor just for himself. And he had
a great library.
Yeah. And then he said, well, if you're interested, I'll tell you which books are good to read and which ones don't bother.
But you read on your own time, right?
Yeah, but we had to so we pretty much just spent weekends reading the books he would recommend, and with his guidance, self-study. And we did that in the evenings. On the weekends, we didn't go anywhere. We kind of became a bit reclusive in the sense of just wanting to learn as much as we could, because we loved it. And so it was great. And that's what happened. And that was the main thing that kept us here.
Yeah.
One other question, you have almost 40 years of experience behind you, ladies. And I would say, given all that experience, what do you think are the things that people should be preparing for now, given, as you said, China and Russia and all the uncertainty that we're facing? When we have that much experience, some of it we've learned from our own mistakes of, what didn't I do that I should have done? And now I have that experience, so I know I'm going to do these things. Is there anything for our audience that we might to help us through these crises that are probably going to be happening?
Well, one would be to plan for more inflation. I think that's going to be, because of China, all the things we've been talking about. But how do you plan for that? You can just know that things are going to be more expensive, and deal with it accordingly with your however way you know best. I think that's one thing. I think the possibility of slow growth is also very great, but compared to the days of the pandemic, it's not that bad, But then will that turn into recession? That's a possibility for maybe later this year, but it's too soon to tell. It'll depend how it's handled and that. So I don't know. Can you think?
Yeah, you want to be in the right currency. Of course, in the U.S., the right currency is the dollar for everyone in the world, and that's king dollar for now. Well, I don't know how long that's going to last. When it gets to 103, we'll see if it goes higher than that. But it is the master, and all the other currencies are bowing down to the dollar. So everyone in the U.S. is good. In fact, we have an interesting thing that was just happening, because we also think that tangibles are important to keep, and some keeping where, it's not too far away from you, And I would say
meaning gold and silver primarily. Yeah.
And your home is also good. That's a tangible. And so just remember, tangibles are going to be more in desire than paper. And so that's just in general. So to have that in your mind. But like we were selling when a piece of property, and they went to escrow, and was just like signing this week. And the people backed out because they're Canadians. They said, "Oh, turning this into Canadian dollars is too much money for us." So that is having an effect. That was the first effect we have felt from the currency thing. That no one's ever said that, being a Canadian or whatever, any other currency. And so, that was a consideration for them. They didn't quite realize that they had Canadian. They turned it to dollars to buy, and no, I don't like that. Yeah. So that's just that's already that's why maybe the dollar won't go that much higher. But in the meantime, it is the currency. So be aware of where your liquidity is being. Where is your liquidity going to be, and what currency? For now, dollar's the best, but it may not be forever. But it is now.
But it also, the dollar has negative interest rates. So even though the dollar is king in the currency world, it's negative. You can't collect interest. So that's where gold steps into the picture and looks a lot better, because gold doesn't pay interest. And that was always kind of a criticism about gold in the good old days when interest was paid. But that's not the case. And so that just adds to gold's attractiveness.
Well, meaning real rates, like minus inflation.
Yeah.
They're way down there. But so is the rest of the world.
Yeah.
And so it's like, what's the lesser evil in the world to do? And we almost have to look in that side, because it's not like what's the best, it's like what's the least worst. And so that because of the negative, because of the inflation and negative yields.
Right.
You reminded me of an image that a different interviewee gave us who talked about, and when you talked about gold being stronger than other currencies currently, we've been to seen movies where there's a team of skydivers that are in free fall, and they're holding hands, or they're doing different things, they're trying to get together, but they're all falling. And some of them may be looking like, well, they're higher than the others, but they're all falling. And the interviewee said, if you've got medals, you're holding your level. You're like the pilot in the plane who's just chugging along. Meanwhile, the guys who just jumped out of the airplane, they all got fiat currencies, and oh look, they're not wearing backpacks either, because there's no real protection if the currency is going to go into great stress, or the credit system. We don't want to miss a chance for people to get a chance to find out how they can plug into your work and take advantage of the work at the Aden Forecast.
Oh, well, thank you. In fact, for your listeners, we're happy to send the latest issue to them, but it's at info@adenforecast.com. That's ADENFORECAST.com. And we'll be happy to send an issue.
Oh, that's wonderful. They can, get all the wisdom that you have and so much experience. So I'm sure they will really appreciate that a lot.
Thank you.
We appreciate it.
And we wanted to remind everyone, too, now so that you don't miss out on a single episode of any of our interviews with any of our guests, you can get on our free email list by just going to libertyandfinance.com, put in your name, your email address, click submit, and then make sure you confirm the confirmation email, and you'll be in to our mailing list every single day, 7 days a week. You'll get an email in your inbox with our latest interview, including any time that we have the Aden sisters from the Aden Forecast on. So we just wanted to thank Pamela and Mary Anne Aden, founders of the Aden Forecast, for joining us.
Thank you so much.
Thank you very much.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.